Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khenka. Well, it has been an action-packed week for the market. For today itself, it has been a fairly volatile day, with the Nifty, yo-yoing between red and the green territory. But in the end, we just about marginally managed to end the day in the green for the Nifty. For the Sensex, however, mildly lower, just about 7 points down, 80,710. But yes, we did see wild swings today, but we did well to recover from the day's low. For the week, however, it's been a good week. We saw the Nifty, ending with gains of somewhere around 1.3% or thereabouts. And for the broader end of the markets, they have seen better gains in comparison with the benchmarks. For the day itself, the mid cap index or the broader universe managed to outperform with the Nifty mid cap index ending higher by about 0.2%. Same for the Nifty small cap index as well. Bank Nifty, just about very flat, hasn't really been doing much. We know that this index has been trying to make a recovery after the recent underperformance, but no big moves. Just about around that 54,100 mark, so hasn't really done much. Even in terms of the weekly moves for the Nifty Bank, nothing great. But of course, for the week, I think it's the auto pack that stood out clearly because if you look at some of the stocks that did well for the week, I'm talking about M&M for the week itself, it has given double-digit gains of somewhere around 11%. That stock was rallying somewhere around 6% yesterday. Today as well, it was among the top gainers on the Nifty. But for the week, the stock has amassed gains to the tune of 11% or so. Metals and auto names feature among the gainers list for the week. So if you look at Tata Steel, JSW Steel, these stocks are among the gainers, even Coal India for that matter. And in terms of the auto names, aside of M&M, you've had Eicher Motors, that stock has gained almost 9% for the week. You have Hero Motocorp, that stock is up 6% for the week. Bajaj Auto as well gained in excess of 5% for the week. Bajaj Finance has also gained somewhere around 7% for the week. So yes, all in all, a volatile day, but a good week. And of course, we've been witnessing a trend wherein we start the day on a good note, but towards the end of the session, all the gains seem to fizzle out because the sentiment really hasn't really spruced up that much, even though we've seen historic GST reforms this week. But no fireworks, so to say. One would have thought that we could see gains of somewhere around 3-4% for the week, but that hasn't happened. But nevertheless, 1% kind of a gain for the week. In terms of some of the movers for today, aside of Shriram Finance, we had Eicher, M&M, Maruti. These were the top gainers. On the losing front, we had ITC. That stock lost somewhere around 2% today. Cipla and IT names, of course. How can we not talk about IT? Fourth straight day of losses on the IT pack. We'll talk about the triggers in just a bit. But take a look at the laggards, Tech Mahindra, HCL Tech, TCS, all of these heavyweights from the IT pack in the red. Infosys, Wipro, all of them. Even some consumption names like Titan were under pressure today. HUL, of course, as we know, FMCG saw a fair bit of profit taking today. So all these names under pressure. Now, let's talk about IT really. There were some rumors doing the rounds that perhaps Trump could train its guns on the Indian IT services pack for imposing tariff. But of course, that was just a rumor. Bloomberg came out with a clarification that they haven't really reported anything on that front. But still, that did trigger a fair bit of sell-off on some of those IT heavyweights. But another trigger for IT was the fact that a global peer, Endeva, has in fact reported a weak fourth quarter numbers. In fact, they have said that the constant currency revenue growth in the first quarter will be -6% to -5%, while for the full year, the growth could be -1.5% to positive 0.5%. That's something that I think could have spoiled sentiment as well. But for the week, I think the IT index has fallen quite a lot. In fact, it saw a fourth day of losses today. So IT names, of course, under pressure, at least when the rumor was doing the rounds about tariffs. At that point of time, we saw the IT index fall with a thud, but it did stage some sort of recovery post that. But still, the IT index ending the day in the red. So all in all, that was the texture. But some mid-cap names I want to talk about that were in focus today. One was Vodafone. That stock was, I think, up somewhere around 10% or thereabouts. In fact, it hit an upper circuit on strong volumes and it was extending its gains for a third straight day. Ola Electric, that stock is down somewhere around 7%, down for a second day on the trot. In fact, in the last two sessions, it has shared in excess of 12%. Mind you, the stock has done extremely well over the last month or so, 46% up. But some bit of news flow, we'll talk about that in greater details. Varun Beverages, carbonated beverages moved to 40% bracket, GST rate bracket. So that, of course, did impact shares of Varun Beverages yesterday as well and today as well. Overhang continues. The stock was down 4%. E-clerks first saw all these IT services names under pressure. Abbott India, Persistent, some real estate names like Sobha, they were among the laggards from the broader end of the markets on the Nifty 500 today. On the flip side, NetWeb, that stock continues to see good traction, 16% up. Brainbees Solutions, 14% up. And I mentioned Vodafone Idea hit up a circuit of 10% today. GMDC was up somewhere around 12%. You had Godfrey Phillips as well. That stock was up 6% or thereabouts. So yes, individually, a lot of names were high flyers today. Also, the quick commerce lot or the platform companies like Zomato, Swiggy also did well. We'll talk about that also in greater details in just a bit. But we're talking about all the stocks that are on my radar this afternoon. Let's start with the insurance names, the life insurers, SBI Life and HDFC Life. They ended the day in the red yesterday. Of course, removal of GST from insurance premiums, both life and health, that led to some concerns regarding the input tax credit because for 0% GST, there is no input tax credit that the companies can claim. So because of that, no relief on that front. We saw the stocks come under pressure yesterday, but HDFC Life, SBI Life, and all the other insurance names have come out, with statements as to how much their embedded value will really be impacted. Now, the HDFC Life has said that they will be transitioning to the new tax regime from the 22nd of this month when the new rates come into effect. And of course, they are expecting that this GST reform will drive higher penetration and higher growth as well over time. But for the immediate near term, in terms of earnings, they are expecting an impact of less than 0.5% on embedded value as a result of the GST change. So that's not very material according to HDFC Life. And of course, they have also maintained that this GST change will spur demand, and of course, it will be accretive to the value of new business as well. In fact, in terms of VNB, they have maintained the fact that it will double over the next 4 to 5 years. So good commentary coming in from HDFC Life, which kind of allayed some fears on earnings on the earnings front. And we did see these stocks end the day in the green. SBI Life as well, it is expecting 0.2% or up to 0.2% kind of impact on their embedded value as a result of the GST rate changes. ICICI Pru is expecting an impact of somewhere around 1% or so, and Axis Max Life is seeing less than 1% impact on their embedded value. Coming to what the street is really saying in terms of brokerages, Morgan Stanley says that it has an overweight call on HDFC Life. The target price here is at 890 rupees per share. Now, it has said that GST reform should overall drive a higher penetration and improve persistency as well going forward. But it has also said that the company, HDFC Life, has refrained from giving any kind of impact on the VNB, value of new business, so to say. But they are saying that these changes will spur demand over time, and that will bode well for the company. So they have that overweight rating on HDFC Life. In terms of what CLSA has to say on the entire life insurance pack, is the fact that their calculation is saying that the GST exemption on life insurance products, both fresh and back book, could lead to up to 1.5% hit on the embedded value. Now, the drag on fresh book can still be mitigated or managed with the help of price hikes or commission cuts, but backbook will be more difficult or to maintain or to manage because of the lesser flexibility that it has. Now, initial assessment, according to CLSA, indicates a 0.5 to 1.4% drag to the backbook surplus. And the experts that I have spoken to, they have maintained their neutral rating on these life insurers in the immediate future because they don't really know as to how earnings will be impacted. The calculations are still on. The companies are still, seeking clarity on how they can really claim input tax credit, or will there be any relief to that effect or not. So yes, because of that, the view on street view on insurance companies is largely neutral. But for now, Morgan Stanley has an overweight rating on HDFC Life. That was about life insurers. But let's talk about the platform companies, Swiggy and Eternal. Swiggy saw good traction today. In fact, all these new age stocks have been seeing good traction over the last 6 months or so. Eternal is already near to its all-time highs. Swiggy, there's a upgrade coming in from Motilal Oswal. The stock was up and about today, 4%, and there's high delivery as well in the counter today. The stock has been upgraded to buy. The target price has been raised to 560 rupees from 450 earlier. That indicates a 32% upside from yesterday's close price. Mind you, Swiggy shares are over 30% away from their lifetime highs of 617 or thereabouts. So yes, it still has a lot of room to rally, according to Motilal Oswal. In terms of Eternal, they have maintained their buy rating, and the target price here as well is in excess of 400. 420, that's the target price on Eternal. That's a 29 to 30% upside from yesterday's close price. So yes, bullish view coming in there. Of course, in terms of the triggers for the upgrade for Swiggy and bullish view on Zomato, Motilal Oswal has said that the perfect storm has led to multiple tailwinds or a buffet of tailwinds for some of these, quick commerce and food delivery names. And the turnaround cycle has started after multiple headwinds. Now, the urban consumption was weak, and quick commerce, of course, saw intense competition. There was aggressive expansion of dark store rollouts, and of course, customer acquisition costs were elevated. So, amid all these headwinds, there was pressure on some of these names like Eternal and Zomato. But of course, these concerns are abating, and with the GST cut as well, consumption is expected to see a boost, and that could also boost both, dining out as well as at-home delivery trends. So these could lead to more tailwinds for some of these stocks. In fact, discretionary spending is expected to rebound post the GST changes. Uh, Platform order volumes and frequency both are expected to go up. In fact, Motilal Oswal has raised the FY26 to FY27 food delivery growth estimate to 21 to 23% from 19 to 20% earlier. So they expect it to go beyond 20% over the next 2 to 4 quarters. For quick commerce as well, forward profitability assumptions for Instamart and Blinkit have been upped by Motilal Oswal due to easing competitive intensity, moderation in the dark store expansion, as well as falling customer acquisition costs. So these are the factors that accelerate the path to break even where the quick commerce segment is concerned. Well, contribution margins are also expected to see a fair bit of improvement going forward. Swiggy, the stock is up 30% in the last 3 months, still 30% away from its all-time highs, but Eternal is near about its all-time highs. And of course, Motilal Oswal is seeing, good upside here on. But Swiggy also, I think, spoke to CNBC TV 18 exclusively, and they mentioned that this is expected to be their biggest festive season yet. In fact, during Rakhi, the orders jumped 3.5 times, and GST cut, of course, is expected to bolster consumption substantially, and festival demand is expected to be multiple times bigger than 2024. That's some commentary coming in from Swiggy in an exclusive chat with CNBC TV 18. But let's also focus in on Ola Electric. That stock, kind of slammed the brake on the super gains that it has seen. The stock was down somewhere around 7% or so today. Of course, second straight day of losses. Of course, it has already seen quite a bit of run up, as I mentioned, last 3 months, last 1 month, etc. But there is news flow as well. SoftBank has trimmed its stake in the electric scooter maker to 15.6%. That's over 2%. In fact, earlier it had 17.8% stake, but now it has come down to 15.7% or so. But Goldman Sachs continues to maintain its buy rating on the stock. In fact, it has raised its target price to 72 rupees, implying an upside of 12% if you compare to yesterday's close price. But remember, a lot of things are working in favor of Ola Electric because in the month of August, it had overtaken Bajaj Auto to reclaim the number two position. It had got PLI certifications for some of its scooters. That also boosted sentiment. And of course, with the GST cut, demand is expected to edge higher. And we also had that rare earth, magnet issue that was sorted out because the curbs were lifted by China. So all of these factors led to a very strong up move on the stock of Ola Electric. SoftBank has trimmed stake, and the stock has also seen a fair bit of run up. So 2 days of cooling off, and wherein it has lost somewhere around 12% or thereabouts. So those were, all the stocks that were on our radar this afternoon. Of course, it was a very, very eventful week, and today, of course, we are watching out for the non-farm payroll data in the US for the month of August. That will be, a final decider on whether or not we can expect a rate cut by the Fed in its meeting later this month. Street is expecting, a rate cut this time around, 25 basis point, and case is building, which is why we saw such a strong rally coming in on Wall Street also last night. But yes, that will be crucial to watch out for today. Uh, but still good end to the week, 1.5% on the Nifty, mid caps even higher. Although, one would have thought that you would take home better gains because of the historic GST reforms. However, that hasn't happened. But let's see what happens next week. All eyes today will be on the payroll data. But with that, of course, we've come to the end of this edition of Closing Bell. Before I sign out, here's a message for our viewers, introducing Money Control Super Pro, your ultimate investment superpower. Get live calls, trading and investment ideas from SEBI registered experts, pre identified chart patterns, and AI powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro, where serious investors stay ahead. Download the Money Control app and subscribe to Super Pro today.